Gold does not go up. Gold does nothing. Gold is the measuring stick. What does move is the dollar. The value of the dollar has dropped, and thus it takes more dollars to buy the same 1 ounce of gold. But the reason you own gold and silver is because those are the only two monies on the planet that cannot bankrupt in a world that's bankrupting. You still should prepare, and preparing is not going to put you behind. I mean, if you're storing food, eventually eat the food. If you're, if you've bought gold and silver, they can't bankrupt. And with the amount of money supply that is going to have to be printed to service all this debt, they have to go up in currency terms. So if you don't believe that this is going to happen, you should still buy gold and silver, because mathematically, in paper currency terms, they're valued multiples of where they are right now.
According to Bill Holter, there is a significant development taking on behind the scenes of the global financial system, and the warning signs are no longer subtle, they're screaming. Debt levels, currency depreciation, and central bank actions have been seen as warning signs by analysts for many years. However, Holter contends that we have now entered a new stage in which the system can no longer be sustained, and the statistics no longer stack up. The globe is drowning in unpayable debt, according to Holter. To pay for their outstanding debts, governments are creating record quantities of new money. Banks are relying on paper pledges and derivatives that considerably outweigh the amount of actual, tangible collateral supporting them. In order to conceal the seriousness of the issue, gold and silver, which have historically been used to boost confidence when things go wrong, are being artificially driven down. Holter asserts that this suppression cannot continue. The difference between controlled paper prices and actual physical demand is growing daily, and it won't happen gradually when that gap eventually closes. It's going to be violent. Don't forget to like, subscribe, and ring the bell for the latest analysis on gold and silver markets.
They want to get involved with this wealth-building path. What advice would you have for that individual so that they don't make too many mistakes and can start properly?
I would say start off buying silver if you got a fair amount of money. Add gold to it, but learning how to invest in the stock market, the bond market, the traditional markets right now, why waste your time? Because that system is going to end. That system will stop and it will reboot. And yeah, you're going to have to learn along the way. But the reason you own gold and silver is because those are the only two monies on the planet that cannot bankrupt in a world that's bankrupting. You had big buying the last, 3, 4, 5 years. And then this year, you had, when we got higher prices, you've had a lot of sellers, legacy sellers. And you can see that for sure within the coin market. Pretty much most silver products are bid at spot or slightly, like Eagles are bid over spot. But junk silver, which was really the only form that Americans could buy back in the late 70s and early 80s, junk silver, the bid on that now is like $4 under spot. You can buy junk. It's the cheapest form to buy. It's the best form to own. But what's happened is a lot of the people who bought back at $40, $50 back in 1979, 1980, those have come to market. Those people, a lot of those have sold. And what the dealers are doing, or what the wholesalers are doing, is they're taking that silver in $3, $4 under spot, and they're sending it to refiners. And they're picking up an extra 6 to 8% commission or VIG or whatever you want to call it, because that junk is being melted down. Now, this is a temporary situation because there's only so much junk that can be sold, and I think that's slowing down already. But what this means is going forward, there's way less junk available than there was just 6 months or a year ago, because so much of it has been melted down. In the future, in my opinion, junk silver will be the most expensive form of silver in the United States, including Silver Eagles, which right now is by far the most expensive form of silver. So what I'm telling you is, if you're buying silver, buy junk. It's the best form to own, and it's the cheapest form right now to purchase. Gold does not go up. Gold does nothing. Gold is the measuring stick. What does move is the dollar. The value of the dollar has dropped, and thus it takes more dollars to buy the same 1 ounce of gold. Gold and silver, they are money. And this is about money. This is not about It's not about use. It's not about production. It's not about consumption. When this goes down, it is a credit event. It's the end of an empire. The United States is so indebted that they can never pay back what they owe in current dollars. And the dollar is going to crack, credit is going to crack, and when credit cracks, the real economy stops because everything runs on credit.
Bill Holter starts with the enormous 80-to-1 gold to silver ratio, which he believes is the largest red flag in the whole precious metals market. In the natural world, there are roughly 9 or 10 ounces of silver for every ounce of gold. He claims that we are witnessing one of the worst mispricings in contemporary history when the market is pricing silver at an 80-to-1 discount. Silver would rise 3 to 4 times faster than gold even if there was a correction back to a 20-to-1 ratio. Silver is more than just a financial metal, according to Holter. It is among the most important industrial resources on the planet. It is essential to military technology, electronics, medical devices, and solar panels. This indicates that demand is increasing simultaneously from global industries and financial investors. And all of this is taking place at the same time that the financial system is deteriorating. Holter believes that silver's next move will be towards $60 to $62, with a run to $100 within 6 months being entirely plausible based on this setup. He doesn't often make audacious predictions, so this one stands out even more. Make sure to like, subscribe, and click the bell icon to get notified whenever we upload new content. We really appreciate your support.
The sentiment in North America is weak. The sentiment in the rest of the world is very strong. And plain and simple, the reason the sentiment in the rest of the world is very strong is because the United States, back in October, I believe it was, of 2023, commandeered $300+ billion of Russian U.S. Treasury holdings. And the rest of the world looked at that and said, hey, if they can steal $300+ billion from Russia, they can stomp us out like a spider. So central banks, sovereign treasuries, they decided they don't want treasuries anymore because those can be taken away. Just like CBDC, they will be able to take that from your account. But if you have gold in hand, or if these sovereign central banks and sovereign treasuries, if they've taken capital and bought gold with it and they're storing the gold, they have the wealth. It can't be taken away from them. So plain and simple, the reason gold is where it is now is because the US dollar was weaponized, the SWIFT system was weaponized, and the US stole over $300 billion of US treasuries from Russia. Well, right now, the United States dollar, the treasury bonds, the treasuries represent, 50 to 60% of foreign central bank holdings. So if the dollar cracks, what does that do to the central bank balance sheets? Now, if they have gold on it and the gold has gone up and the dollar's gone down, those countries will be better off than countries. I lived in Costa Rica for 5 years, and that the Costa Rican central bank is exclusively U.S. treasuries. So what's going to happen in a country where all of a sudden their central bank goes belly up? It's going to be a disaster. So it depends on the country, and it depends on the balance sheet of that specific country. Throughout history, there was always a crash, always a big panic, and then all of a sudden stocks stop dropping and they start going up like a rocket ship, but only half as fast as the currency loses value, and that's based on their local currency. I mean, you could look at, I think it was 2 years ago, the Zimbabwe stock market was the best one in the entire world in Zimbabwe currency, but not in dollars or not in gold. Gold is the measuring stick. That the dollar is going to be in its same form a decade from now, and I assume it will not. There's two ways that the dollar is measured. One way that mainstream media measures it through the USDX index, and that's versus other foreign fiat currencies. That's meaningless. Whether the dollar is stronger or weaker versus the yen, the euro, the pound, that doesn't matter. The true valuation, as I just mentioned in the last question, the true valuation is against gold. And the dollar in the last year has lost 35, 40% of its value versus the dollar in the last 12 months. Gold does not go up. Gold does nothing. Gold is the measuring stick. What does move is the dollar. The value of the dollar has dropped, and thus it takes more dollars to buy the same 1 ounce of gold.
Silver is the best place for people to start. According to Bill Holter, someone can then add gold if they have more money to work with. However, he contends that learning how to invest in conventional markets like stocks and bonds is a waste of time because the system as a whole is coming to an end. It will crash, shut down, and then restart in an entirely new configuration. People will also need to learn as they go during that transition. He is so adamant about gold and silver because in a world where nearly everything else is on the verge of bankruptcy, they are the only forms of money that cannot fail. Holter then highlights an intriguing development in the silver market. There has been enormous purchasing over the past few years. However, many older holders began selling when prices recently increased, particularly in the coin market. With the exception of silver eagles, which continue to fetch higher prices, the majority of silver products are currently purchased at or marginally below spot price. However, junk silver is being purchased for $4 less than spot. Because of this, junk silver is the least expensive kind of silver available, and according to Holter, it's also the best to own. He clarifies that a large number of individuals who purchased silver at exorbitant prices decades ago are now selling it. In order to receive an additional commission, dealers and wholesalers purchase that junk silver at a discount, melt it down, and send it to refiners. However, this will permanently remove a significant quantity of junk silver from circulation. If you enjoyed this video, don't forget to hit the like button, subscribe to our channel, and turn on notifications so you're always up to date. Thanks for watching.